So you guys, listen, let's go into Eric's fantastic 10 write-offs to maximize your refund. Can I get a drum roll? Can I get a drum roll? Can I get a drum roll? Okay, so listen, the first tax write-off, listen, that you need to definitely own and you need to definitely grab a hold of is home office. So of course you can't even get into these tax write-offs unless you're able to do what? You have to get your LLC or sole proprietorship. So that's number one on my list. Home office. Number two on my list is office supplies. Listen, if you don't take the home office deductions, you can deduct the business supplies you buy. Hang on to those receipts because these expenditures will offset your taxable business income. The third one on my list, let me get another drum roll. You won't believe it, but listen, furniture and other equipment you can also write off on your taxes. When your office supplies are more than just pens and paper, you have another tax cutting opportunity. Office furniture acquisitions provide a couple of choices. Deduct 100% of the cost in the year of the purchase or deduct a portion of the expense over 7 years, also known as depreciation. Also, items such as computers, copiers, fax machines, and scanners are all tax deductible. Okay, my fourth one. Let me get another drum roll. You won't believe it, but software and subscriptions. The increase section 179 on the IRS provides another tax break in the area of business expenses. Previously, a company had to depreciate the cost of computer software over 3 years. Now, off-the-shelf software and business buys can be fully expensed in the year of the purchase. The rules for deducting business and industry-related magazine subscriptions weren't changed. So listen, you can deduct that as well. You can continue to take the total cost as a full deduction in the year spent. Let me get another drum roll. Some of you know about this, but you need to take advantage of it. Mileage and leasing or buying a new car. Somebody say, woohoo! You're thinking about buying that new car, leasing that new vehicle. Listen, you can get a tax break for that off of your taxable income. If you drive for business, the IRS wants to give you some money back. But Uncle Sam, unfortunately, loves documentation. So keep a notebook in your vehicle to record the date, mileage, tolls, parking costs, and the purpose of your trip. Don't forget about gas, repairs, and yes, insurance. If you are leasing, include those payments. If you are buying the car, factor in the interest on your loan and depreciation of your vehicle. We're already at number 6. Come on, let me get a drum roll. Number 6, you're not going to believe this, but travel, meals, entertainment, and gifts. Yes, the good news for small business travelers, you might as well stay in a nice hotel because the entire cost is tax deductible. Likewise, the cost of travel, air, rail, or auto is 100% deductible. And the costs associated with the life on the road, dry cleaning, rental cars, and even tipping the bellboy. Come on, somebody. You can give you can give a great tip to the bellboy. I know you've been dying all of your life to get away from that 2% tip you've been giving. Now you can give a 20% tip, and it's tax deductible. The only exception is dining out. You can deduct only 50% of your meals while traveling. Go ahead, stay at the Hilton and eat at McDonald's. Come on, somebody. You can stay at the Hilton, just don't eat there, A direct gift to a client or employee is also 100% deductible, up to $25 per person. So, okay, let's get a drum roll for number 7. Number 7. Insurance premiums. Come on, somebody. Self-employed are paying your own health insurance premiums. These costs are, come on, not 50, not 60%, but 100% deductible. You better get on it. You also can include some of the premiums you pay for long-term care insurance for yourself and your spouse or your... So let's give a drum roll, family. Okay, you're not going to believe it, but retirement contributions and Social Security. Listen, if you are self-employed, which my mother always told me, have something on the side. So I'm going to tell you, no matter what you're doing in life, have something on the side, especially if you have a 9-to-5. You want to have something on the side. So listen, retirement contributions and Social Security, except what I want you guys to know is that for individuals who are at a higher tax bracket now, tax bracket now than they think they would be in the future, the SEP would be wonderful for you. Because basically what it does is it postpones pretty much the taxes that you pay. What I want you guys to know, what's good about the SEP is that it's tax deferred, but it's more for individuals that might look down the road and say, okay, I believe my tax bracket down the road is going to be less. So if you believe your tax bracket is not going to be less down the road, you might want to consider, you're not going to be able to put away as much, but you might want to definitely consider the Roth IRA. And next week, we're going to really have them two battle it out. And I got another fund that I want to kind of tell you guys about that I believe that would knock both of them out. We'll get there. So, but the Roth IRA is for individuals. You want to pay taxes now on their retirement because you are in a lower tax rate now, and in the future you plan on being like me, a multi-billionaire. Somebody say amen. Somebody say amen. Amen. Don't hate me because you ain't me. Don't hate me. Okay, number 9. Let's get a drum roll. Number 9. Okay, number 9 is telephone charges. Number 9 is telephone charges. So you can deduct the cost of the business phone, the business calls that you make for your business from home. When your bill comes in, circle the business related calls, total them up, and keep a copy. At the end of the year, tally your 12 bills and deduct, come on somebody, 100% of that. Last one, come on, let's give a round. The last one that you can deduct, you're not going to believe it, but it's time to put those kids to work. Child labor. It's always good to employ your kids. Depending upon how much you pay them, they might be able to avoid income tax. Plus, there is no Social Security tax when you hire your own child who is 17 years old or younger. Come on, put them to work. Somebody shout, put them to work.